Welcome to the deep dive. Today, we're digging into Albemarle Corporation's first quarter 2025 results. We've got the press release right here.
Yep, and our mission, as always, is to cut through the financial jargon.
Exactly. Pull out the key takeaways, figure out what's really happening with their performance.
Net sales, income, EBITDA, cash flow, future outlook. It's all in there. We'll try to make sense of it quickly for you.
Okay, so let's jump right in. Overall financial performance for Q1, what's the headline?
Well, the top line net sales definitely took a hit. They were down 21% compared to last year.
41%, wow.
Yeah, it came in at $1.1 billion this quarter versus $1.4 billion in Q1 2024.
And what drove that?
The company was pretty clear. Lower pricing, mainly in their energy storage segment. That's the big one.
Right, the lithium side of things.
Yeah.
It really shows how exposed these guys are to commodity price swings, doesn't it?
Absolutely. It can really move the needle on revenue.
Okay, so sales value down, but then the bottom line, their net income, that actually went up.
Yeah.
Seems counterintuitive.
It did, yeah. Quite significantly, actually. Net income attributable to Albemarle went up to $41 million.
From what, last year?
From just $2.4 million in Q1 2024. So, yeah, a big jump.
Okay, hold on. Lower sales, much higher profit. How does that work?
Good question. The release points to a couple of things. First, lower average input costs. So what they're paying for materials went down, it seems.
Okay.
And second, those cost-cutting efforts they've been talking about, they seem to be, really bearing fruit.
Right, the productivity improvements and stuff. We should definitely circle back to that.
Yeah, we will. But those are the main drivers for that disconnect between sales and profit.
Okay, that makes sense. Cost control is key. Now, the report breaks things down by segment too, right? Energy storage, specialties, and Ketjen.
Correct. Each tells a slightly different story.
So let's start with energy storage. Given the sales drop overall, I assume that segment felt the brunt.
You assume correctly. Net sales there dropped by 35% year over year.
35%. Ouch. And again, that was pricing.
Primarily pricing, yeah. But what's interesting is their actual sales volumes were flat.
Oh, really?
Yeah, and they even hit record production for lithium salts from their network. So they're making just as much, maybe more, but getting paid less for it.
Like that farmer analogy you used before we started harvesting the same amount of wheat, but the market price just craters.
Exactly like that. Really highlights that lithium price volatility we keep hearing about.
So how did that affect the profitability, the adjusted EBITDA for energy storage?
That was also down, but maybe not as much as you'd expect. Given the sales drop, it decreased by 5.9%.
Okay, so sales down 35%, EBITDA down only about 6%.
Right. Which suggests, those lower input costs and the cost savings did help cushion the blow somewhat. They offset some of that price pressure.
Gotcha. Okay, so energy storage, price pressure is the main story. Let's pivot to specialties. Sounds like a different picture there.
Yeah, quite different, actually. Specialties saw net sales increase by 2%.
Okay.
Well, they had a really strong increase in volume, up 11%. That was more than enough to offset an 8% decrease in their prices for those specialty chemicals.
So selling a lot more product, even if the price per unit dipped a bit.
Exactly. It shows the benefit of having, a diversified business. That segment provided some stability.
And profitability in specialties, did that follow the sales increase?
Oh, yeah. Adjusted EBITDA there surged by nearly 30%.
30%, wow.
Yep. And it wasn't just the higher volume. They specifically called out lower manufacturing costs from their productivity initiatives. So efficiency gains really paying off in that segment.
That's impressive. So while energy storage is battling price, specialties is boosting profits through volume and efficiency.
Precisely. Different dynamics at play.
Okay, and the third segment, Ketjen. How did they fare? Their business is a bit different, right?
It is, yeah. Ketjen saw a small dip in net sales, down 5%. Interestingly, they actually got higher prices, up 4%.
Huh. So why the sales dip then?
Lower volumes, down 8%. But they put that down mainly to the timing of sales recognition. So maybe not a demand issue, just, when sales officially hit the books.
Okay, so timing might explain the slight sales decrease. What about Ketjen's profitability?
Now that's where it gets interesting again. Despite the small sales dip, their adjusted EBITDA jumped significantly, up 75.6%.
75%. Whoa.
Yeah, huge increase, driven by selling a better mix of products, more high profit stuff, and also getting more income from their joint ventures.
So really, three distinct stories across the three segments this quarter.
Absolutely. No single narrative fits the whole company.
We touched on cost reduction driving some of the profit improvement. The release seemed to emphasize that quite a bit.
It did. They're clearly making a big push on managing expenses. They said they've already hit about 90% of their midpoint target for cost and productivity improvement.
And that target was, what, around $350 million?
Midpoint, yeah. The full range was $300 to $400 million, and they actually think they might hit the high end of that range now.
So they're ahead of schedule and potentially exceeding their own goals on cost savings.
Seems like it, very proactive, which you'd want to see given the price headwinds in lithium, right?
Definitely.
Yeah.
Okay, let's talk cash. Cash flow, liquidity. How's the financial health looking?
Pretty solid, actually. Cash from operations was strong at $545 million.
Okay.
Now, that does include a $350 million prepayment from a customer. So a nice one-off boost there.
Right. Need to factor that in.
But even if you back that out, their underlying operating cash flow conversion, how much profit turns into actual cash, was still a healthy 73%.
That's pretty good.
Yeah, and they even mentioned having a line of sight to break even free cash flow, even at current lithium prices, which suggests the core operations are generating decent cash.
That's reassuring. What about spending? Capital expenditures, new projects, that sort of thing.
Big change there. CapEx is down significantly, over 50% lower than in 2024.
50%. Wow. So they're pulling back on spending.
Looks like it. They're projecting $700 to $800 million for this year compared to $1.7 billion last year.
Huge difference.
Yeah, it signals a shift, more focus on optimizing the assets they already have, being more selective about new projects, really prioritizing high returns.
Seems like a smart move in the current environment. Prudent capital allocation.
I'd agree. And overall financial stability looks good, too. They reported about $3.1 billion in liquidity at the end of March.
So plenty of cash and available credit.
Yeah, gives them a solid cushion. Financial flexibility to handle market bumps or jump on opportunities.
Good to know. Okay, let's look forward. The outlook for the rest of 2025. Did they change anything based on Q1?
Importantly, no. They kept their full year 2025 outlook considerations unchanged.
Even with the lithium price situation and talk about tariffs.
Even with all that, yeah. They acknowledged the lithium price uncertainty, though. They actually gave 3 different market price scenarios.
Well, they did. How did that work?
Basically, they showed potential impacts on sales and EBITDA based on, end of 2024 prices, the H1 2024 price range, and Q4 2023 average prices.
So giving investors a sense of the potential range depending on where lithium goes.
Exactly. And they laid out some assumptions too, like how price changes would flow through contracts and assuming spodumene prices stay around 10% of LCE.
Okay, that helps frame the sensitivity to lithium. What about volumes for the full year in energy storage?
They're expecting volume growth there somewhere between 0% and 10% compared to 2024. So flat to modest growth expected on the volume side.
Okay. And the outlook for specialties in Ketjen? Still looking positive?
Generally, yes. For specialties, they see modest volume growth overall. Pharma, auto, oil field looking okay, maybe some weakness in construction.
Right.
And for Ketjen, the outlook seems pretty positive. Favorable product mix, lower input costs expected, and their turnaround plan continuing to help.
So it sounds like they expect specialties in Ketjen to continue providing that balance against potential energy storage volatility.
That seems to be the expectation, yeah. The release also gave some other detailed outlook numbers: depreciation, tax rate, corporate costs, interest, share count, the usual stuff for detailed models.
Right, the nitty-gritty for analysts. And finally, you mentioned tariffs earlier. How are they factoring those in?
They said their outlook ranges already include the anticipated direct impact of tariffs announced as of late April 2025.
Okay.
And the CEO, Kent Masters, made a comment. He basically said, while the full impact of tariffs and trade stuff is still a bit unclear,
Yeah.
they feel their global footprint and the fact they deal in critical minerals where there are some exemptions puts them in a relatively good position to handle it.
Interesting. So they feel somewhat insulated, perhaps.
Or at least better positioned than some others might be. Advantageous was the word used.
Okay, let's try and wrap this up then. Key takeaways from this deep dive into Albemarle's Q1.
All right, so summary time. Overall sales were down, right? Driven by lower lithium prices hitting the energy storage segment hard.
But net income was way up.
Exactly, thanks to lower input costs and really strong cost management, which seems to be a big focus.
And the other segments, specialties and Ketjen, performed well.
Yeah, very well. Strong performance there, providing some crucial balance. Cash flow looks solid, especially the underlying generation, and liquidity is strong.
And they're cutting back on CapEx, focusing investment.
Right. And importantly, maintaining their full year outlook despite market volatility and tariffs, feeling somewhat confident about navigating those headwinds because of their global setup.
So the big picture,
Mhm.
facing challenges in lithium pricing, but diversification and cost control are really helping their overall performance.
That's a good way to put it. Yeah.
So for you, our listener, hopefully, this quick dive gave you a clearer picture of Albemarle's Q1 and their outlook without needing a finance degree.
And maybe something to think about. Seeing these different stories in energy storage versus specialties and Ketjen, how does that reflect what's happening in the broader industries they serve?
Yeah, like the global demand for critical materials, supply chain stuff.
Exactly. Those wider trends playing out within one company's results, it's definitely food for thought.
Absolutely. And if you do want to dig into the nitty-gritty yourself, all the documents are on Albemarle's investor relations website.
Definitely worth a look if you want more detail.
Okay, that wraps up this deep dive. Thanks for joining us.